The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin, the CoinDesk Bitcoin price XVX index currently trading at $65,457. Bitcoin is up about 5.6% over the past 24 hours. And the CoinDesk Ether price ETX index is at 47.28. ETH also up about 2.5%. And the new DFX CoinDesk's DeFi index is at 655 points, up about 2.4%. Joining us now to discuss the crypto markets is FTX US CEO Brett Harrison. Hello there, Brett. So, crypto hitting a $3 trillion market cap, a new milestone. ETH is at an all-time high, was at 47.67. And Bitcoin dominance has gone up from 70% earlier this year to down now to 40%. So how do you interpret all of this?
So for me, it really feels like we're entering a next stage of the development of the crypto infrastructure and ecosystem where people are looking for what we're going to do next with crypto. I think Bitcoin as a store of value and as a mean of transfer has been incredibly important for the development of this space. But next, we're really looking at applications. Applications are everything. So when you think about the layer ones that really let people build applications on top of the blockchain, of course, primarily Ethereum, the first blockchain to really bring smart contracts to the world. But now, especially things like Solana, which have smart contract support, they let people build applications of all kinds, but can do so with very high transactions per second, very low cost. This is why there's so much interest now in things like NFTs and gaming and ways of using blockchains to harness that next power of technology. That's why we're seeing such growth now in things like Ethereum and Solana. And now it's not all just Bitcoin.
Hi, Brett. Do you have any regulatory concerns, particularly in the U.S.? I mean, regulation of the crypto industry has become a hot topic. Is there anything on the horizon that you're particularly worried about?
We're keeping such an active, pulse on what's going on with regulation in Washington. We're looking very hard at what's happening between the two main regulatory agencies dealing with markets, the SEC and the CFTC. I think when this infrastructure bill got passed, and yet we're still seeing all of the coins, nearing all-time highs or reaching all-time highs, I think what we're seeing is that the knowledge that regulatory action is coming for the crypto industry is sort of already priced in. We all realize that in order for there to be longevity in this industry, there has to be clear rules, clear guidelines for especially these licensed gatekeepers like FTX that are responsible for making sure that users, customers' funds are safeguarded and that we're making sure there's no money laundering through the system and these kinds of safeguards. We expect these to come and we want to be a part of it. And I think that the comptroller had a lot of good insights about why regulation is important for things like stablecoins. There's a lot that history can show us about cases where innovation gone completely unchecked has resulted in problems for ordinary consumers. And it's important for us to put those things together in perspective of what's happening now and make sure that there are safe rules of the road for continuing innovation in the space.
Mm-hmm.
So, what did you make of Comptroller Sue's comments? Besides that part, I mean, is there anything else that stuck out in your mind with what he just said a few moments ago on our show?
Yeah, I was particularly struck by, interested in the comparison to historical banking systems. And thinking a lot about, for example, a fractional reserve banking system, which left unchecked might have the ability to handle withdrawals and deposits in a sort of median case where everything is functioning fine in the economy. But in a case where there's a large run, that's when you start to see systemic risks really come to light. And that's what I think drives one of the most important aspects of the PWG report and what we think is one of the most important aspects of ongoing stablecoin regulation, which is transparency. You have to take something like USDC, which focuses a lot on having a 100% reserve digital currency. And in that sorts of cases, if you can really prove that that's the case, if you can have transparency and show that you have full either US dollar or very high grade commercial paper backing the stablecoin 100%, then you're not as worried about a run risk. You can let people withdraw 100% of the stable coins and get dollars from them. But if you have something where you have riskier assets on the book, if you don't have full 100% reserve on the books, and people don't know about that, well, that's when you can end up with a problem where if everyone wants to redeem their stablecoin at the same time, you can get into a lot of trouble. So to me, I think that's the most important aspect of what we think is a sound stablecoin regulation. And it seems the comptroller agrees, based on his comments about, the history of, pre-Civil War banking.
Would that apply? Well, when looking at Tether and seeing that apparently a lot of their assets are backed by commercial paper, is that something that perhaps should be further regulated?
Yeah, I think it's completely sound and reasonable for there to be certain requirements on stablecoin providers as to, what are the costs around creation and redemption? What guarantees that there can be, roughly, free redemptions and creations at large or infinite sizes based on their reserves? What are the actual nature of the instruments being held at the institution? What licenses do they have that give them the ability to act as a depository for these kinds of instruments in the U.S.? I think these are all perfectly, reasonable regulations that should, absolutely apply to Tether, as with every other main, stable coin. Tether being just one of them.
FTX is one of the largest customers of Tether. Have they made any appeal to them for that kind of transparency and increased self-regulation?
Sure. Just to be clear, FTX itself is not a customer of Tether. I think that we are certainly our customers who are doing large amounts of trading with Tether and USDC and several other stable coins as the quote currency of the pairs that we allow on our exchange. Have made a number of direct connections with the Tether folks and appealing for them to be more transparent about their books and their assets, because our customers know that creation and redemption of Tether has been possible and easy and has worked well for all this time, which is why it's grown to such a large amount. But we want to make sure that we're dealing with stablecoin providers that do play well with the rules required in the U.S. to be a good actor for being basically essentially something like a bank and being able to issue these instruments. And we support that wholeheartedly.